shares that neither of you need absolute convincing to buy. Your stock picks this evening. Jean Pierre, what would you be going for?
So Transaction Capital is my stock pick tonight, Julieta, which might be a little bit of a strange one because we've just had the We Buy Cars unbundling. But that is exactly why we've seen Transaction Capital shares, the rest that is left over, which is basically Newton, a debt collector, and then a ring-fenced SA taxi business and some cash at the head office. The share was down sharply today. And that's to be expected because a lot of index funds and retail investors, institutional investors ended up after the We Buy Cars with, call it, a 2/3 holding in We Buy Cars. And there's 1/3 of this thing left over that you have nasty nightmares of being Transaction Capital. And everyone has been selling their Transaction Capital the moment they could from yesterday. So at some point, I think the selling will subside, and this is their opportunity to get in, because I do expect that Newton will be stabilized now. It might not even not be listed a year from now if the management team does a management buyout or something like that. But I do think that it's worth double the current share price. Sure. And as long as this forced selling subsides a year from now, things might look very different for Transaction Capital.
Okay. Graeme, how about you?
So Julieta, in the dark days of COVID, I think it was in July 2020, I suggested that we buy that dirty fossil fuel company Shell, which is London listed. I think at the time it was £12. The oil price was in the doldrums. And sometimes it's nice to close the loop. You know, I think we said it was a tactical thing. We weren't, you know, we just felt that it was worth more. You know, it's sitting at about £28 or thereabouts. In this 3 or so years, you probably earned £3.5 worth of dividends. So, you know, I'm in the camp that says that fossil fuels are in their sunset phase. You can just see the explosion in EV, for example. So at the margin, I believe that demand will start to taper off for the products that they produce. And against that backdrop, I would argue that, you know, 5 or 10 years from now, you definitely don't want to be owning these fossil fuel companies. So we've made good money. It's been rewarding, and particularly because of the spike courtesy of the Middle Eastern tensions and OPEC, you know, the oil price has kicked up and that's taken the share price higher. So I think it's a good time if you followed that recommendation. And if you don't want to sell all of them, sell 60%, you're left with a free ride. And yeah, but it's been quite kind, and I think it was a good opportunity for us way back then.
Yeah, okay. A pick and a sell. Jean Pierre and Graeme, thank you very much for joining us this evening. Always a delight to speak to you both. Jean Pierre Verster is from Protea Capital Management. Graeme Körner is from Körner Perspective. And up next, the close. Stay with us.